Good afternoon and welcome to the On The Market PLC interim results investor presentation. Throughout this recorded presentation, investors will be in listen-only mode. Questions are encouraged, can be submitted at any time via the Q&A tab situated in the right-hand corner of your screen. Just click Q&A, scroll to the bottom, type your question and press send. The company may not be in a position to answer every question received during the meeting itself. However, the company will review all questions submitted today and publish responses where appropriate to do so. Before we begin, we'd like to submit the following poll. I'd now like to hand you over to Jason Tebb, CEO, and Clive Beattie, CFO. Good afternoon.
Thank you very much. Good afternoon, ladies and
Good
gentlemen, and thank you for attending our latest presentation, which is a report on our half-year results to 31st of July 2022, in which we demonstrated further strategic progress and drove continued revenue growth. A quick reminder of our mission statement. This is our company ethos, which is listening, innovating and delivering. Three simple words which we believe sums up everything that we do in terms of our relationship with our customers, with our consumers, but just as importantly, with our staff as well. I'm Jason Tebb, Chief Executive, and with me is Clive Beattie, Chief Financial Officer, and today we'll be reporting on some of the highlights. We'll conduct a financial review, we'll look through some of the strategic updates of what we've done in the period, and most importantly of all what's coming next, and then we'll finish with a brief summary and outlook. So let's move on to those highlights. But before we start, again, a reminder of our vision, what the future looks like for On The Market, and that's as a property technology business which provides services for agents, house builders and consumers, featuring what we call best-in-class products and platforms across the entire property ecosystem. And we've demonstrated over this period that we've had continued strong growth and strategic progress. We've had a very good first half of the year with solid growth in revenue, strong site visits, and significant progress in our strategy to build this differentiated tech-enabled property business. That's resulted in a growth in ARPA, which is average revenue per advertiser. You'll see a lot of that phrase in the presentation today. And we have a strong cash position, which means we believe we are well positioned for any property market cycle, not just this one. And as such, the board are confident in meeting our full year expectations. Those of you who looked at the announcement the day it was released via our RNS will also see that we released a concurrent announcement, and that is that we're very pleased to announce that we have cemented our position as the agents portal by having some of the UK's largest brands commit their long-term futures to on the market. Even if you're not in the estate agency sector, you'll notice the brands on the screen now and recognise some of them. If you are in the sector or in property at all, you'll probably recognise all of them. But in particular, in addition to those who've extended or continued their contracts, we're very pleased to announce that Lohman Group have joined us, who are one of the most high growth estate agency businesses in the UK at the moment. And of course, delighted to have leading London agent Foxtons on the platform as well. So I'll pause briefly and we shall go through some financial and operational highlights with my colleague Clive.
Thank you, Jason. Good evening, everyone. Just turning first to the financial highlights. If we go through one page, thank you. So revenue, we continue to see revenue growth in the period. So revenues are 14% up and 17 million of revenue for the half year. And that's driven by our ARPA, our advertising revenue per average revenue per advertiser, up 9% in the period. For the group as a whole, up to £205. The estate agency ARPA within that up 7% to £222. And the new homes ARPA up more strongly at 40% to £129. Carrying on, new homes for us, I think anyone who's followed us for a little while knows that is an area that we think has been a good performer for us. We only started in September 19 advertising new home developments. We then got into the COVID disruption. So actually it's both new and had some interesting markets to fare within, but actually continues to show very strong growth. And so up 73% the revenues from there to 1.9 million in the period. Turning to profits, we continue to be profitable. Adjusted operating profit at 1.3 million. That is down in the period. We have chosen in this first half that we're reporting on to invest, particularly in team, which really is around sales and support, but importantly development of new products that obviously we'd then look to sell in the future. So team and marketing have had a bit more investment in the first half, but still retaining profitability and looking towards an improved operating margin as we enter the second half. Cash flow, we're still generating cash, so 3.1 million of adjusted operating cash flow generated, and a very healthy position at period end, 8.7 million on the balance sheet of cash, no borrowing, so a very strong financial position. If I then, sorry, I think it's gone too far. If I then turn to the operational metrics that drive those financial metrics, in the period we had an average of 13,118 advertisers, up 1% from last time. Within that, that's slightly down on agency branches, but again up on new home developments. But from our point of view, that's a very healthy number. And really for us, it's about driving the ARPA growth and increasing our revenue from that base. Of course, we'll look to continue to recruit new advertisers. To a large extent, it's more selling those advertisers. We've got additional value-added products and increasing ARPA over time. If I actually jump to the right-hand side, these are some of the consumer metrics. So you'll see against the prior 6 months, an 11% increase in traffic visits to the site, up to 138 million, and 107 average leads per advertiser per month, which is up 6% against the prior 6 months. And both of those are obviously important. The leads are the lifeblood of the value we provide our customers who advertise. Those two combine to what we've shown as a conversion ratio of 6.1%. So that's really saying what percentage of visits actually generate a lead. And we think that's a very strong metric because, as I think, again, followers of us will know, we are targeting our advertising and our offering towards serious property seekers in the consumer world. So people might come and casually browse on a website, but ultimately, if they're just looking at neighbours' properties or whatever it may be, they're not going to get in touch with agents or new home developers. They're not going to generate leads, and therefore, ultimately, they're not providing value to our advertiser customers. So a high conversion rate is important because it shows that actually people who are genuinely wanting to transact in the property world are actually coming to visit on the market to do so. Turning to the left-hand side, I mentioned the additional agent products. So those have grown very strongly, 73% up in revenues in the period. It's still a relatively small number. By far, the majority of our revenues are still from the subscription fees that people pay just to list the properties, that the agents pay to list their properties on our site. But nevertheless, the fact that that's grown strongly encourages us that we are actually, through our engagement with agents, we are identifying products that they want, identifying products that they will value and that they're prepared to pay a fair price for. And so that rate of growth, I think, is a validation of our strategic direction, albeit that's fairly small numbers at this early stage. And then finally, I think, again, we've talked before about the need for valuation leads. A valuation lead is a very important lead for an agent. This is ultimately where they get the chance to win an instruction to sell a property or to let a property. And that's how they get paid. They only get paid on the sell side. So to be continually growing and up 69% our valuation leads, especially as we enter some perhaps difficult markets for estate agency themselves, clearly it's more critical than ever to get these valuation leads and have the chance to win instructions. So again, a very positive metric and one we think is very important. If I then go on to just touch on new homes, I mentioned earlier, we've seen this as a very good growth segment of our business. So 73% increase in revenues to 1.9 million. So obviously very significant. And the number itself becoming much more significant in our overall revenues. This has grown from obviously 0 back in 2019. So very good growth. The growth was a combination of still an increasing amount of developments on site. I mean, actually, it's grown very strongly in terms of listings. So clearly that can't continue forever, although there hopefully will be some more growth to come still. But nevertheless, we think the ARPA still has room for growth. And in particular, at the bottom of this slide, and Jason will come back to it, a few of the products that were developed or under development in this first half period, so not at that point contributing towards revenues, but they will start to sell into our new homes customers going forward. So again, it's very much more around identifying products that they can use as additional advertising, additional ways to conduct their business effectively through our portal. This slide I won't talk through in detail. Obviously, we're happy to take questions. This is really just presenting information that you can get through the RNS or, of course, through the slides that are on our website. And it breaks down the different parts of the business and the details of ARPA and visits, advertisers and so forth. I think the one thing I would draw to your attention is the bar chart on the right. The blue bar is our revenues from estate agency. So you can still see that actually by far the most of our revenues are coming from the estate agents. And within that blue bar, most of that is the monthly subscription fee. That's just recurring fees for listing properties. But as I say, there is some now product spend, and that is growing quickly. Above the blue bar, the next bar, which is orange, I think some of these colors seem to merge into each other. The orange bar is new homes, and you can see that growing consistently and strongly across the 4 periods, and that's very encouraging. And we would hope to see that continue. And so that will become, if it remains the faster growing than the EA, that will become an increasing part of our revenue stream going forward. And then finally, there is a little yellow bar at the top, which is the company is called Glanty that we acquired. People may be familiar with that name, but really it's our OTM software business where we're supplying software services under subscription-based licenses. At the moment, that business is early stage, and to a large extent, we're investing in developing rather than actually selling. And certainly initially, we may be trialing those products with people on free contracts. In a similar way that we grew our estate agency business to start with. Obviously, this is a much newer business, so we wouldn't anticipate this being a huge hit to a huge contributor to our revenues in the near term. But for the medium term, we think there's a lot of potential. And again, Jason will come back to the strategic aims behind that one. And then finally, balance sheet. I think everyone is concerned about people's robustness in the current uncertain conditions. I mean, actually, I think, we are well protected in a couple of ways. We firstly aren't directly affected by the underlying housing market. So we're not paid based on numbers of transactions. We're not paid on value of transactions and therefore price movements. We're paid to advertise the properties that our agents or new home developers have for sale. And actually, in good or bad times, the markets, ignoring COVID very briefly for that 3 months when it did close, transactions don't dry up. There are always transactions. And as long as there are transactions, we can find ways to offer value through our offering to our customers. But even over and above that, if there were to be difficult times ahead for whatever reason, as I touched on earlier, we've been cash generative now for some number of periods in a row. Although the cash balance you see in the bars has gone down, that is because of strategic investments we've chosen to make, the biggest being Glanty, where we invested 1.8 million of cash, but we've made some other investments as well. So actually, we've been generating cash period on period. We've got an 8.7 million, as say, period end cash balance with no borrowings. So actually, we think we've got a very robust position from which to either protect ourselves if really necessary, but hopefully more importantly to continue to invest in the future growth of the business, and ultimately perhaps depending on what opportunities there are, start to look at distributions to shareholders.
Great, thank you very much, Clive. Thank you. And let's move on to a strategic update of where we are and a brief reminder of the journey that we've been on and our evolution. The first thing we did almost 2 years ago now was decide on a strategy of becoming more than just a portal, more than simply the listing service. And we had to build the foundations for that. And then we had to develop the rationale behind what more than just a portal means, what products, what services, what functionality are required in order to be able to meet the needs of our customer base. And ultimately, our aim is to become a one-stop shop for agents and house builders. So we believe that we have now delivered on building the foundations and on becoming more than just a portal. We based our strategic and operational growth on these 4 clear pillars, and that is portal, onthemarket.com, which will always remain front and center of everything we do. And then introducing software, which, as Clive mentioned earlier, we acquired the Glanty business last year, but we've recently, in the last few weeks, rebranded that On The Market Software, and I'll tell you a bit more about that later. And then we've started to introduce data and market intelligence tools and communications and marketing tools. All these 4 things are really topics that agents talk about all the time. It's products that agents need all the time. And it's systems, products, services, and functionality that help agents do their job quicker, more cost effectively, and more time efficiently too. So let's see how we built those foundations. And we believe we have delivered on this now. We listen to our customers. That's first and foremost. We've engaged with thousands of our agents and house builders on various town hall sessions where 50 or 60 come onto a virtual call at once and tell us what they want and need from us. On the back of that listening tour, which we've carried out and continue to do, and listening to consumers' feedback as well, we developed an entirely new brand, which was launched at the tail end of last year. We also launched our brand new website built from the ground up with a whole suite of new functionality and very much focused on the consumer-centric side of that engagement strategy. We launched that in December last year as well. And we support that now with a new TV advert creative and a new TV strategy, our largest ever TV advertising campaign based on an always-on strategy to be able to really focus on specific calls to action to get consumers to visit the site. We also rebranded our previous new and exclusive proposition. That's where agents choose to support us by listing properties 24 hours or more before either Rightmove or Zoopla. We rebranded that only with us and put countdown timers on the site to make it very clear for those serious property seekers where those properties are. And then we built a whole suite of tools, features, and functionality to help agents and house builders do their jobs. So I think we've delivered on creating those foundations. And I also believe we've delivered on becoming more than just a portal. And we believe as a management team now, we offer outstanding value and service. We offer the opportunity for agents to potentially save thousands of pounds. And we've focused very heavily on customer service. Most of you on this call will know that I was an estate agent. I was an agent for 20 years, and I was very outspoken at the time, saying that as the portals have got larger, they became increasingly distant from the companies that put them there, in the first place. So we as a business now are absolutely listening to our consumers and very much focusing on our customer service to our agents and house builders. And as I say, we believe we now deliver outstanding value and service. I also believe that we are now delivering on the most important lead for agents. As Clive mentioned earlier, a valuation lead is the gold standard lead in any estate agency business. It's the one that gives the opportunity to go out and sit on a sofa and win that instruction. It's the opportunity to build their own pipeline. And with new instructions come new buyers, tenants, and landlords too. So valuation opportunities really are the most important type of lead. And through a combination of internal development, some work with our own software providers, through some commercial partnerships, we've been able to build this end-to-end valuation workflow. So in this example here, the TV campaign runs, it's high impact TV, and we focus on an always-on strategy. A consumer would visit the site on the back of that TV call to action, which is very clear. It says, find out what your property is worth instantly with our free online valuation estimate. A consumer then visits the site, they get their online valuation estimate, and alongside that estimate are a number of agents to choose from if they want a physical valuation. If they click that button, then through our auto dial software, a call is immediately put in place between that consumer and the agent, literally in a few seconds. And when those calls happen, our stats show that over 50% of all of those calls result in a valuation appointment booked on that very call. And this is a very powerful first mover advantage for our agents, having the opportunity to speak to potential sellers and landlords and get themselves an appointment booked. We're also nurturing and engaging with those people who haven't necessarily said that they want a physical valuation straight away. We're in pilot stages at the moment with a new product that enables us to tap into those people who maybe aren't ready for a valuation yet, engaging with them, building rapport with them, building trust with them, and then serving them up oven ready back to the agent. And this is a very powerful way of us nurturing the leads to be able to make sure we're maximizing on all of those opportunities from the millions of site visits that come to us every single month. And we've also engaged and come up with a number of new ways to interact between consumer and agent. I'll come on to those shortly, but we're always developing new tools and new ways for agents and consumers to interact with each other. And we believe now that we probably, for the first time, are at the forefront of innovation, really pushing the boundaries of what's possible in terms of user experience and user interaction. And we also believe we've delivered on finding serious property seekers. We've said this since the very start of this new strategy just 2 years ago, that we will focus on those serious property seeking consumers, not just people who want to browse, but people who actually want to transact, who want to buy, sell, rent or let. And through our On The Market USP, which is Only With Us, which I mentioned before, our stats show that our Only With Us listings generate on average twice as many email leads in the first 24 hours compared with the standard listings. We also ask our customers and our consumers how confident they are about the market, and we speak and engage with hundreds of thousands of people on the site. When they visit the site for more than a minute or so, a little pop-up comes up which asks them a series of questions to qualify them and see how motivated they are. And our last property sentiment index reported that 75% of On The Market's active buyers in the UK were confident that they would purchase a property within the next 3 months. And we're very, very proud of that statistic because it demonstrates that serious property seekers are visiting our site. Hence the reason why we are indeed so proud of the 6.1% lead conversion rate. And we think that that's a really good indicator of focusing on those serious people. And we're helping our agents find those serious people all the time by coming up with a suite of tools, of which SmartMail on the slide is one, a proprietary piece of software that is exclusive to us and enables our agents to canvass and market for new opportunities, both from valuations and for serious property seekers. Most importantly of all, I believe that we are now delivering on the value proposition, and I believe we offer exceptional value for money as a proposition. The package in essence now pays for itself, an estimated saving of £600 per branch per month based on the value of the services that an average agent could use that are part of the subscription fee themselves. And the reason we've done this is because there's a whole movement from property technology companies, new startup companies, constantly pitching estate agents with the next best product or service, but usually they fall into a number of categories. First of all, I'll help you win more instructions. Second of all, I've got a good bit of tech to help you manage your leads more effectively. Thirdly, I've got lots of data. I'll provide you with more data to help you win more instructions and be an expert in your area. Fourthly, I'm selling you an insurance or protection product. And lastly, I'm going to train and develop and help and mentor and coach your staff. The great news is that we now deliver all of those things, best in class versions of all of those things as part of our core subscription. So we believe we have delivered now on offering exceptional value for money. But we're not resting on our laurels. We're still investing for the future. As I mentioned earlier, our largest ever TV campaign continues to run on all the major channels. We're focusing and supporting that with our digital marketing activity on all the usual platforms and channels that you would imagine, plus the aggregators and other opportunities as well. And most recently in the period, we tied up with Channel 4 to do a consumer-focused small series called Finding the Cornish Dream. And that was really designed to showcase the best agents in the Cornish area. And we had the opportunity to work with Channel 4 to help to promote this. And that's really clear brand building opportunities. So I believe with our campaigns that you can see on the screen, we're both delivering specific calls to action, i.e. visit the site and book a valuation. And we're also delivering on brand awareness, brand building activities as well. A quick update on the products that we've delivered and continue to deliver, and a hell of a lot has gone on in the last few months. And as Clive mentioned earlier, most of the work that was done in the period was on product and service that were delivered just after. So we were pleased to launch in early September, just a few weeks ago, a whole suite of new products, services and functionality, some for our agent customers and some specifically geared for our consumers, for the consumer use and the ways that they can use the site more easily to help them find what they want. Probably most powerful of these are two platforms that we've introduced: video appraisal and express appraisal. Video appraisal really is like a Zoom call. It enables an agent and a consumer to interact with each other online, but the agent controls what the consumer sees. So they can share on the screen historic sales of the properties that they have sold, properties that are on the market currently that are similar to theirs. They can upload and share a whole host of data via our third-party association with Sprift, data on average house price, on the broadband speed, on mobile signal, so they can show themselves as experts in that local area and really build rapport with the consumer. And similarly, Express Appraisal, and that enables an agent to have a personal touch to what is typically an online appraisal. And we did this because many of our consumers are reporting to us that actually current appraisals across all portals fell into two very extreme camps. The first of which was generate a valuation via a computer, via an algorithm that spits out an average value or an estimated value. And the other extreme was have an agent come around, knock on your door and come and sit on your sofa. And we highlighted very early on, and our consumers agreed with us, that actually there's a significant cohort of people for which neither of those extremes are right for them. So that's why we built both video and Express Appraisal. Both of those things, by the way, still allow consumer interaction. So in both cases, the consumer can now, for the first time, upload photographs of their home. They can upload details and information about their property that might make a difference to its value. They can even center where the property is on Google Street View to really give the agent the best possible chance of providing the most accurate valuation. And we're very pleased with these two innovations, the first of their kind in the industry. And we've also helped develop our agent profiles for our estate agent customers. You know, we are the agents portal after all, so it's absolutely vital that we showcase our estate agents in as best possible way as we can. And therefore, enhancing our agent profile pages is a testament to how seriously we take our relationship with our customers. And we've also introduced personal branding, as you'll see in the example there, the ability for a property to be tagged to an individual, because there has been a movement in the estate agency sector over the past 3 or 4 years, focusing on the individual and their expertise, their local knowledge, how long they've been operating in an area. And people are very much choosing the individual as well as choosing the company. And we think we are right to be showcasing that as well. For consumers, a whole host of new search tools, many of them asked for and requested when we were doing our campaigns, listening to what our consumers wanted, and in our consumer focus groups. But now, for the first time in the UK, consumers will be able to search by greener choice. So greener choice properties, that's properties with an above average EPC rating, properties that have some eco features such as solar panels, air source heat pump, ground source heat pump. They can search and filter by those. In addition, for tenants, predominantly on the back of lots of feedback from tenants, you can now for the first time search by pet friendly properties. It was a big feature from us in terms of our upgrade. Many of our consumers who were tenants were asking for it. There were hundreds of requests. So we've built exactly what consumers want, and you can search by pet friendly homes. And also for those who have accessibility needs, we have developed an accessibility search. So criteria which meets those accessibility needs can be displayed on the site as well. And then last but not least, we focused on integrating WhatsApp for Business with our estate agents via the platform. So consumers can chat in real time with an agent via our platform. So a whole suite of new features and functionality worked on and built in the period and delivered shortly after. Clive mentioned earlier our software solutions and how we're going to evolve these over time. And he also mentioned that last year we acquired a business called Glanty. We're pleased now to rebrand that Glanty business On The Market Software, which features a number of core products that help agents do their job quicker, more effectively, and be compliant too. TechLet, as you can see on the right, was a platform that already existed, and we continue to work on building our customer base there. But we're pleased to announce the launch of Tech CRM, which is an end-to-end CRM system, customer relationship management platform, which really combined with TechLet now offers a very cost-effective and smart solution for sales, lettings, property management, and client accounting. Our focus is going to be getting traction in that marketplace, building up our market penetration, and then from our point of view, we can help to monetize that, and over time should become a significant part of our revenue stream. And because We obviously didn't have enough to do in the period because we're rolling out all these new things. We've also decided to roll out a number of new products specifically geared towards helping house builders and agents, of which they are all revenue generating for us too. On the left-hand side, you'll see the left-hand column that says in-market advertising and impact core templates. Both of those products are geared towards new house builders. So house builders who want to be able to either target their own brand and give their brand exposure in conventional search, or in the case of impact core, the ability for our house builders to focus on specific demographics via our proprietary social media marketing platform, either to people like first-time buyers or to downsizers. Both of those things geared towards our house builder customers. And on the right-hand side column, you can see two products that were developed for our estate agency customers. And although we started working with these commercial partners a few months ago, it's actually a very well-timed release, particularly with what's happening in the marketplace. The insurance product, I'll come to the one at the bottom first, management fee protection product. Many agents rely on their management fee drip income in order to keep their operations alive. This management fee protection product allows our agents to be protected should there be a challenge with a landlord or a tenant, a vital piece of protection at a time when they would probably need it the most. And from a revenue protection perspective, something that does happen from time to time. I remember many times in my estate agency career, I would have a vendor take a property off the market. I'd then drive by that property a couple of months later and see a removal van outside. And actually what sometimes does happen is a buyer will view a property through an agent and then knock on the door afterwards and try and do a private deal without the agent being involved, with a view that potentially they're saving the vendor some money and therefore will negotiate a better deal. This does happen from time to time, and as such, we're delighted to be working with MIL to be able to provide a product that safeguards agents on revenue that they so richly deserve. A quick mention on our evolution and where we aim to be. So as I said earlier, we aim to be the one-stop shop for estate agents and house builders. And as you can see from this slide, it's getting pretty populated. When we first launched this new strategy nearly 2 years ago, this slide was pretty empty, but we've already built a number of features, products, commercial partnerships, new innovations in order to be able to fulfill this ecosystem. And we're very pleased with the progress that was being made, but there's still so much more opportunity. There are many things that happen before, during, and after a transaction for estate agents. And we think there's opportunity to tap into that to help them do their job quicker and more effectively, and obviously generate revenue opportunities as well. So we're excited to see how this ecosystem will develop in time. And even more medium to long term, we're focusing on how we can potentially offer future solutions for consumers as well. Why are we looking at consumers? Well, because we now sit well within the top 100 most visited websites in the UK. Not property sites, all sites. So we sit well within the top 100. Our own stats and data shows that 75% of people who responded say that they are serious about buying a new home within the next 3 months. These are seriously motivated people, a captive audience, and an opportunity to tap in to this captive audience, many of whom will take other products and services either before, during, or shortly after they've bought or let a property, is very exciting for us. So in the future, we will look to ways that we can help our consumers manage their home, manage home finances, manage home maintenance, manage home improvements, and maybe even a marketplace for homewares too. So this is a medium to long-term strategy, but nonetheless, we believe we're well positioned to deliver that as well. We're a responsible business too, and we continue to work with our third-party provider EcoAct to help us deliver our own carbon footprint understanding and build our own sustainability goals in the future. And our working groups, our staff working groups, are working very well with our staff engaging with each other to work out ways that we can help to benefit them as an employer, focusing very much on employee development, on diversity and inclusion. We now have our own dedicated learning and development department with a back-end system that enables our staff to learn and develop for the future. And we believe that this sits perfectly within our core ethos, our mission statement of listening, innovating and delivering, which is just as applicable to our staff as it is to our customers and consumers. So just to close and to summarize, the market outlook, let's be clear, is uncertain. There's lots happening both macroeconomically and geopolitically. But we know that we have these serious property seekers visit the site. And we've seen over the past few months the start of a levelling off process between those supply and demand fundamentals, which was so much at play earlier on in the year. There was almost no stock to look at, and yet hundreds of buyers queuing outside for every property. Now we are seeing more stock coming to the market. We're taking and seeing more new properties listed for sale and more properties for sale than at any time since March 2021. So we believe that there's going to be a rebalancing of the market based on those historic double-digit growth rises that happened over the last 2 years post-COVID. We think it's a rebalancing rather than an adjustment. And we've seen still really good levels of activity. Our latest data from our property sentiment index showed that last month, 53% of homes still went under offer within 30 days of being listed for sale, 53%. So still a significant number of buyers looking to transact. But the important thing to remember, as Clive mentioned earlier, is that actually our model isn't directly linked or affected by transaction numbers or by interest rates or by mortgage rates. Because we have a very simple subscription model, our agents and house builders choose to list with us. We charge a subscription. That's irrespective of how many properties they list at a particular time. We don't charge per lead. We don't charge per listing. This is a subscription-based business, and we therefore believe that On The Market is well positioned to support our customers' activities and help them succeed both now and in the future in any market cycle. And therefore, just to close, we believe that now absolutely is our time. We've got these incredibly strong foundations, a strong financial position, a good result in terms of our half-year point, increasing revenues all the time, a substantial and loyal advertiser base, the fundamental support of agents as part of the agents portal. They want us to be successful, and testament to that is the number of agents who've recently just signed new contract extensions with us, some of the largest estate agency groups in the country. And we believe we offer now exceptional value and exceptional service. Our value proposition potentially saves agents thousands of pounds at a time they need it most. So we believe there's significant opportunity still within the customer ecosystem. We're doing so much in terms of tapping in to various parts of that ecosystem, helping agents do their job quicker and more effectively. But we still think there's lots more opportunity to move to become this real tech-enabled property business. And we also believe, as I mentioned earlier, there's opportunity to monetize consumers in the future as well. So I'll just close by saying thank you. Thank you to Clive, as always, for his support. Thank you to my senior management team. And thank you in particular to all of the staff who've worked above and beyond to deliver such an exciting group of products and services. All the hard work that was put in during the period has paid off shortly after with all these releases that I mentioned. And I'm very pleased on progress, but even more excited about the future. Thank you to you two for your time. And after a short break, we shall go to Q&A. Thanks very much.
Fantastic. Thank you very much indeed. Jason, Clive, thank you for the presentation. Ladies and gentlemen, please do continue to submit your questions using the Q&A tab just situated on the right-hand corner of your screen. But just while the team take a few moments to review those questions submitted today, I'd like to remind you the recording of the presentation, along with a copy of the slides and the published Q&A, can be accessed via your investor dashboard. As you can see, guys, we've had a number of questions come through during the meeting. We did have one pre-submitted question, so if I may, I'll start with that. It reads as follows: when will you stop issuing shares to new or old customers and as an incentive to sign new or extended contracts?
I can take that one, Jason. So the authority we had that those share issues are made under actually expires this year. So broadly, life is never quite as simple as a straight answer. Broadly, that means it'll stop. However, there will be some contracts entered before the authority expired where some of the issues may take place afterwards. But certainly we're coming to the end of the programme, and the numbers will diminish and drop away relatively soon after the year end.
That's fantastic. Thank you very much indeed, Clive. And if I may just ask you to click on that Q&A tab, and where appropriate to do so, just read out the question, even who it's from, and just give your response, and I'll pick up from you at the end, please. Thank you.
No problem at all. Thank you. And we'll get through as many as we can in the time. And we'll start with Zach. Zach, thank you very much for your question. And the question is, what is On The Market's market share versus competitors like Zoopla and Rightmove? Clive, would you like to summarise this?
Yeah, I mean, obviously there's different definitions of market share, but if we just look at listings of properties effectively through branches or developments for new homes, it's possibly the easiest way. You can see our figures here. You can see Rightmove's figures because they're public. It's harder to get Zoopla figures because they're a private company. Those are, the three of us are the biggest three portals by some margin. But as a rough order of magnitude, I'd say we're probably at about 65 to 70% of Rightmove in estate agency listings, probably higher, probably 85%-ish on new home development numbers listed. So that sort of order of magnitude. Zoopla, as I say, I can't be certain, but I'd probably put them in estate agency between us and Rightmove. Bigger than us, probably not as big as Rightmove, but uncertain. And on the new home side, probably similar-ish again to all of us. I mean, there's not as much difference, I think, between the three of us on new homes. So, as I say, you can get all the data you want on either us or Rightmove because we all put out presentations with the numbers in. Zoopla is a harder one to do.
Thank you, Clive. We'll move to the next question. Steve, thank you very much for your question. Steve says, can you give an example of the life cycle of property coming into an agency on the site and how they get charged for using your platform and any upsell opportunities? Well, Steve, I think we've answered some of that. So I'll just reiterate. We charge a subscription model. So whether an agent lists 1, 10 or 100 properties in a particular month, that doesn't change the subscription. So we don't charge on a per listing basis or on a lead basis. We just charge for that monthly subscription. So that's our overall pricing model. But as you're right, as you said there, we do have other revenue generation opportunities from what we call products, and products come in various different shapes and sizes. I'll give you an example of the one that we talked about during the presentation, actually. And if you take the example of a valuation product, which we would charge incrementally for in addition to the subscription fee, that's where a consumer would visit the site. They would say, I'd like an automated valuation. That after they click their automated valuation, there's 4 agents, brands and names appear on the right-hand side. There's only those 4 leaders, and our agents pay to be on those 4. Obviously, it's a powerful statement to say I'm associated with that particular valuation opportunity. It's also sticky revenue because once an agent takes that particular slot in that particular location, then they won't want to give it up. So that's a way that we generate additional revenue. Some other examples, we also have a social media platform, proprietary platform that helps agents and house builders actually market their properties to specific demographics. We would charge in addition for that, which I think is continuing to develop. As you saw from the slide deck, we've just launched a new iteration of that for our new home builders. And then other things such as banners, brand building and brand awareness opportunities, and particularly for new house builders. So house builders historically tend to spend more on product than estate agents do. So we have a whole suite of things such as email campaigns, targeted marketing campaigns, and other things to help both house builders and agents spread the word and get their brand known. So I hope that gives you some sort of examples of how we charge for additional products. Thank you for your question, Steve. Moving on to Matthew. Matthew, thank you so much for your question. What will be the key drivers of profit growth now you have expanded the On The Market offer?
Yeah, I think in the short term, it's really, and mainly because of what we showed in the slides. So you remember that slide where I said I showed the bars of revenue, and the vast majority was the blue bar that was estate agency revenue, and then increasingly the orangey bar that was new homes. Because they are so much of our current revenue, actually our main short-term opportunities remain around that core offering, around the portal, the listing, the fees to list, and the additional products that Jason's just been talking about, the sorts of examples. And really, those combined are what feed into our ARPA and driving our ARPA forward. We still have quite a lot of agents paying discounted rates that we are going to look to migrate up towards full tariff rates, particularly as the full tariff package becomes something that has more valuable products incorporated within the full tariff that aren't necessarily available if you're on discounted. So that will be the short-term driver of growth. Some of the wider areas we've touched on we think are important, but probably really going to be more of an impact in the medium term onwards, just because obviously they're starting from, well, effectively nothing, but a small base now. It's going to take a while till they grow into to be a meaningful contributor towards the overall total.
Thank you, Clive. We're running out of time, so I'll just take one more question. That's from Scott, and Scott says, thank you, Scott, for your question. There's a lot of commentary on social media about your town halls. What has been the main benefit of them? So you're right, there has been a lot of commentary on social media about our town halls, and I'm pleased to say that now they are award-winning town halls, because last week we won an award with the Consumer CX Award, which is one of the most well-known consumer experience awards, and those town halls were nominated and indeed won one of those awards. Why do we do them, and what are the main benefit being? Well, we do them because I want to listen to our customers. I spend a significant proportion of my time listening and engaging with agents and house builders. I engage with thousands of estate agent customers, listening to what they want and need from a portal. Why is it important, and why do we do it? Because many of the products, features and functionality that we have launched, both in the period and periods before, a lot of things you've seen on the presentation tonight have been as a direct result of the feedback we've received from our estate agents and house builders customers. So that's why we do it. That's why we're delighted to continue doing it, because listening and innovating and delivering comes with starting to listen, and then we can act on what we hear. So hopefully that answers your question. And I think we are now just out of time for the Q&A.
Fantastic. Thank you very much indeed. And thanks for covering off all those questions. You can, of course, any further questions that do come through, the team will be able to review those, and we'll publish responses where appropriate to do so on the Investor Meet Company platform. Jason, briefly, just before redirecting investors to provide you with their feedback, I know it is important to you guys, if I could just ask you just for a few closing comments, please.
Well, just to say thank you very much for attending this evening. Hopefully you can see significant continued progress in our transition to become a more than just a portal, with a whole suite of products, services and functionality to help agents do their job quicker, more cost effectively and more efficiently too. I believe that, as you can see from tonight, we are absolutely delivering on valuation leads and providing valuation opportunities for our agent customers. I believe that we absolutely are delivering on serious property seekers. 75% of people who come to our site are looking to buy a report that they are confident of purchasing in the next 3 months. And most importantly of all, I believe that now we are delivering exceptional value and exceptional service, two very key differentiators for us, really focusing on providing exceptional value opportunities for agents to be able to utilize our products and services and a whole suite of other commercial partnerships and our new innovative products as well as part of the core subscription fee, potentially saving agents thousands of pounds. And we're very excited to see how this continues in the future. Thank you to my team who've worked so hard to make sure that these have been executed, and we very much look forward to the coming months and years.
Fantastic. Jason, Clive, thank you very much indeed for updating investors today. Please ask investors not to close this session. You should now automatically be redirected to provide your feedback, and all the team can better understand your views and expectations. This will only take a few moments to complete, and I'm sure will be greatly valued by the company. On behalf of the management team of On The Market PLC, we'd like to thank you for attending today's presentation. That concludes today's session. Thank you, and good evening to you all.